Economic Forum is a hotspot for business leaders from across the world, and they all spoke with CNBC TV18 to give us a glimpse of what 2016 holds in store and the leadership challenges that it presents. So on the show, you're going to hear from John Rice, the Vice Chairman of GE, Sir Martin Sorrell, the CEO of WPP, Carlos Ghosn, the CEO of Renault Nissan. You're also going to hear from John Nelson, the Chairman of Lloyd's of London, Ronald de Jong, the Chief of Markets of Philips, private equity leaders, John Studzinski, the Vice Chairman of Blackstone, and Stephen Pagliuca of Bain Capital. I have with me the Vice Chairman of GE, John Rice, to talk us through what the world is looking like in 2016 and, of course, what India holds forth in 2016 as well. Thank you very much, John, for your time here in Davos.
Thanks for having me.
I do want to start by getting a big picture view of the global economy from you. The mood here is gloomy. The challenges make for a very long list. As a business leader, what do you expect this year will bring up?
Well, there's certainly a lot of discussion about the price of oil and whether it stays low or starts to come back at some point. Volatile currency markets and equity markets and all of that. But I think if you look under the covers, if you get beneath the headlines, in our businesses, which are concentrated now around technology infrastructure, we still see lots of opportunities for growth. Harder to get the deals done. We have to arrange financing and support that. So it's a different play than it might have been 2 or 3 years ago when the rising tide was lifting all the boats, but still a lot of opportunities.
Now, how much impact is this lower crude oil price situation having on the oil and gas business? I was just speaking with the executive director of the IEA earlier today, and he spoke of a big drop-off in oil and gas exploration and production investments across the world.
Yeah, there's no question capital expenditure in the oil and gas industry is down. That affects our oil and gas business. It's you know, just one of GE's pieces, yes, so this is a good time to be a little diversified. But it also, I think, puts a premium on something that we have really been focusing on the last few years, and that is shifting from CapEx to OpEx, from capital expenditures to operating expense and productivity. So when you can deliver productivity to your oil and gas customers, lower the cost of extracting a barrel of oil or an MMBTU of gas, then you're still going to have opportunities to sell, because in the existing investments that these companies have, they still need to make them more productive. They're not going to shut them all down, but they need to be able to make money in a $30 barrel world. You've been through a dramatic transformation process at GE over the last few years, one that is underway even as we speak. You've sold assets worth over $100 billion in just the last year itself. Can you talk us through what GE of the next 10 years is going to look like? Well, really two very big changes that got us to where we are today. One is a recognition that the world for a long, long time is going to need technology-based infrastructure. Right. The second thing you just alluded to is our move away from financial services. Yes. You know, we live in a world that does not appreciate or value the combination of financial services with industrial business. I know you all have been in India for very long, and you've been very bullish more recently about the prospects for the Indian economy. How do you measure the progress? Whether it is, you know, the order book on the railway side or the defense side or the nuclear power side, are things moving at the pace that you hoped they would? I think they're starting to. They're definitely, we feel good about the new government, the Prime Minister, the team that he's assembled is, I think I've been traveling to India for over 20 years, and I think it's a very competent group of people. They've got hard work to do. Make India is an important initiative. We and other companies need to be part of it. It needs to be seen to full fruition, if you will. The frictional costs of doing business in India, when you move things around between the states, the paperwork, the taxes, all too complicated, much more complicated than they should be. I think this is the team that can get at a lot of that.
Amongst the many sectors that you all are working in India, which look most promising if it's easy to identify? Where do you think that the order book is going to fill up faster? Because all of these, the ministers and the government is speaking very proactively about, but I'm not sure that the movement on ground, especially in infrastructure, has been that good.
Well, we think power generation, if there's the right market prices, okay, so investors need signals. They need signals that they are going to be able to invest and get a reasonable risk-adjusted return. So you will have, I believe you have lots of capital that today is still sitting outside of India waiting to invest in the energy space if they get the right signals.
Thank you so much for your time. I have with me Sir Martin Sorrell, the CEO of WPP, a business leader who speaks passionately not just about the global economy, but about India as well, which is one of his favorite destinations.
It is, but the cricket was good. We did well in South Africa.
Well, I wasn't watching the cricket as much. I was preparing for this trip, putting on all the layers.
Catch up with India.
Well, you're looking at the headlines, Sir Martin. What sense does that give you of 2016? How are business leaders reacting to the volatility this year has opened with?
Well, I think we sort of, if we go back before Christmas, we felt, I'm talking about us, felt that 2016 would be as tough as 2015. Mm-hmm. Not appalling, but I've still got to see the final numbers for December, but I think we've done what we need to do. But having said that, I think what's happened in the first couple of weeks of this year, the impact of the Fed and then the impact of the China situation, the flight from the RMB, the dollar, the flight to the dollar, the exodus of capital, that has made people, obviously the markets are uncertain. It's interesting that when the Fed raised rates, the market didn't react immediately. It seemed to take a couple of weeks, and it's not until people came back after the New Year, and maybe China was the trigger for that. But I think fundamentally it's about the Fed and the change in interest rate policy. Not that it was a big change, but it was a change in attitude, and people are anticipating further increases. There is a populism post-Lehman, which is a serious trend. So don't discount it. Don't think, as we sit here in our bubble, or in East Manhattan.
Well, it's a very gloomy bubble right now, I must say, and you've just added to it. No, even China and Japan, that was not part of the mix so far the last 2 days.
The one shining brick is India.
So I'm going to come to that.
The rock star Modi.
What are you looking forward to in 2016? What, according to you, will be the key trends?
Well, the two buckets, this is apple pie and motherhood, as I put it, but you can put everything down to two buckets: geography, and technology, which you mentioned. The geographical bucket, becomes important because of the shift in the fast growth markets, and India is the shining star of the BRICS. If you include South Africa in that, that would be the case as well, because South Africa is going through a difficult time as well. But Brazil, Russia, China, obviously all question marks. I mean, raging bulls on all the markets, actually. But some longer term. I think Russia is going to take a longer period of time. South Africa probably will.
So many people I talk to here say business leaders will start scaling back investments given the
they already have.
Yeah, so even further, given the volatility we're seeing at the beginning of this year, how are you approaching the year? Is this a year to hunker down?
Well, we invest in people. And we invest in people as our revenues grow. And, thankfully, we've got 15,000 people in India. And as our revenues have grown, and grow by 10% a year, we hopefully can keep our headcount increases to less than 10%, but we add 7, 8, 9%, even 10%. And so we invest in human capital, and we invest $12 billion a year in people. Trade pattern of the UK, investment pattern of the UK is still geared to Europe, whether we like it or not. We still don't do well enough in India. We still don't have enough trade with India. When Prime Minister came to London, we all talked about that. He did a great job in London. He did a great job in New York and the US and in the UK. And even got David Cameron excited at Wembley. David
that
Cameron,
was something else.
It was unbelievable. Yes, David Cameron saw a rock star and said, "I'd like to be like that."
20,000 Gujaratis in London. Sir Martin, sir, thank you for striking both a gloomy and cheerful note in the interview.
Okay.
Thank you for your time.
Good.